beginner class. So this is officially now recording. Let's go ahead and get started. If you guys don't already know, I'm pretty open. You don't have to raise your hands. You don't have to stay muted. I want kind of an open environment, the kind of environment where we can all hang out. We can all discuss trades. We can discuss variable ideas
The system crash, Randy.
and not talk about
Crash.
There we go. I muted Fred. Sorry about that, guy. But we can just hang out, right? Be people, because some of us are self-employed. Some of us are entrepreneurs, which means we are at home all the time, which means we don't have that extracurricular kind of office time because we work from home. We literally, honestly, are doing the thing and we are making our money at home. So having said that, feel welcome to unmute yourself. Feel welcome to come out, ask questions, put it in the chat, please, 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 because that's the only reason I'm here tonight. If you guys don't know, please don't trade what y'all cannot afford to lose. These classes are recorded for future educational purposes, and anything you say is recorded. Anything I say is also recorded, for better and for worse. Please do not consider any of what we're talking about financial, legal, or investing advice. And just so you guys know, I practice high risk, high reward trading. You can follow similar steps with safer, lower risk, lower reward trading, principles. So my absolute favorite, this is one of those goofy things that if you bring up at a dinner party, most people are going to call you nuts. They're going to say you're on something. They're going to say there's no way that's possible. But yes, a penny doubled, so that's 100%, right? A day for 31 days is $10 million. And when you see this in action, that is what we're doing on these charts. It doesn't always work out, penny for penny. It is not always easy to achieve, but this is what we're doing. We are doubling and compounding our money day by day by day to achieve great things at home. And that's kind of awesome. So last but not least, how to compound to 5, 6, and even 7 figures. You don't need large accounts. You do need good rules. You can use AFX. You can use whatever, it is that you choose to use. I would prefer AFX if we're doing simplicity because of the way the swaps work and obviously the leverage, but obviously it's still your decision. So just know that it's very possible to grow a very small account into very big numbers with good rules. Now you're going to fail a lot on the way there, particularly if you're high risk trading, but guys, it's possible. So that's that. Anybody have any questions, comments, all that other good stuff? Please don't be afraid to unmute yourself. I'm here for you.
Hey, Miss Jenny.
Hey, how are you?
Good. How are you? I was in your morning class today.
Good morning. Well, good evening to you now.
Yeah. So my question is, I remember you putting up like horizontal lines on the US 30. So are those actual trades?
Yeah. So
Or-
this morning we called that sell on US 30. I think it moved almost 3,000 pips from where we called it.
Okay.
So at the beginning of class, kind of I go over whatever last class trades were, win, lose, or draw, right? So we
Mhm.
discuss that, and then I look over structure with you guys on a template that I call structure template,
Okay.
and then we look at a couple of setups. So to take those trades, I literally draw vertical lines for either a pending order or an active order, and then I point out take profits along the way.
So how do I enter those trades?
You know how to press buy and sell on your computer?
Yeah. So just basically drag and drop. So I saw 4 lines. So I just basically press sell 4 times.
Well, if you want
And
to enter 4 trades. So those powder blue lines that you
uh-huh,
saw, those were our take profits. Our entry lines are going to either be red or green, and then our take profits are going to be kind of powder blue, just so you can see the little digits on the right part of the screen.
Okay, so the last take profit, it just depends on me how much take profit I want to take, basically.
Well, that's a good question. I think like we talked about this morning, I want to run another challenge with the group and maybe like have a $500 competition kind of thing to
Hmm.
get you guys back. Well, not you particularly, you're new, but to get some
Hmm.
other people back into understanding the value of scalping. So we're calling these trades on small time frames and we're calling them with multiple take profits. However, there's still a great way to just go in, get your small amount of pips, go for one ATR, and then get out of the market. So you can decide where you want those take profits. I kind of have my settings of my trade manager set up to kind of milk the trade and baby it a little bit along the way, but I want to catch the bigger part of the bigger move.
Hmm.
You can obviously just say, hey, I'm trying to compound. I'm going to go to that first take profit. Or, hey, you know what? I want to see how much I can get. So once I hit that first take profit, I'll scale out of some of my trade. I'll protect the rest of it and then let, a portion run. So how you manage that is ultimately up to you, but there's 1,000 ways to do it. So
So on the last take profit, if it doesn't reach that profit, do you just sit there and watch the chart and to see if it hits it or not?
No.
No?
Well, so let's discuss this here. I'm going to go and share this other part of my screen. Let's make sure it's the right thing that's up over here. So you know that in that, how new are you to that group?
Your group?
Yeah, the advanced membership group.
Well, I've been watching, oh, sorry. I've been watching a lot of your Google Doc videos, but today was my official like live session.
Okay, so you're pretty new.
Mhm.
What I want you to know is we have a trade manager. So I'm going to come over here. I'm going to pull up just the settings on
The
that
ATM, correct?
ATM. So
Okay.
almost everything I'm doing. Now, again, you can use that. You can do all the same, or not all of it, but you can do a lot of the same things without. There we go. Without a
ATM.
trade manager. But to be very transparent, I don't
Mhm.
even know which setting this is. For example, with these settings, this I'm going to hit escape to lock that. If I entered
Mhm.
on this candle, for example, it's going to scale me out at partial one. It's going to apply my exit manager. It's going to
Mhm.
scale me out at partial two. So I've got a trade manager that's helping me,
Okay,
right?
okay.
Because I can't watch this whole thing the whole time. So
Yeah,
if
yeah.
you're manually trading and you took this entry, you would have to like set an alert on your chart. So if you go
Mhm.
here, if you know how to do this, hit alert,
No.
and then have your computer send you an alert once it hits a certain price point. And then
Okay.
once it hits that price point, you could come to the chart, maybe scale out of a portion of this trade, move your stop loss into profit, and let the rest run, for example. Um,
Okay.
but until you get comfortable, I think
Mhm.
doing what we talked about this morning, go for that first take profit and then just be done for the day. Go for that first
Oh,
take
okay,
profit
okay.
and be done. That's two. Our first take profit is typically 250 pips. So
Okay.
that's way, way easy. And then just forget the rest until you get more comfortable.
Oh, okay, okay, okay. And then do you have like a, so where did you get the structure template from?
I made that.
So do we have access to this or no?
Yep, you have access to every single thing on this template. So let's go to that real quick. Every single thing on my structure template, you guys have access to in that group. It's all anything that I have for free that people aren't
Mhm.
selling. Of course, I'm going to give it to you. I'm not going to sell you some package with it. These are all free indicators. So this is a trend line indicator. It's not perfect, but it works, right? It's good for new people. So we've analyzed it quite extensively to say, hey, this, and this, that, and another. We could have the line slightly closer, the line slightly further, or this one's a little bit more accurate. But it
Okay.
helps the people who don't know how to, quote unquote, help themselves. So it just gives you a foundation. So you got trend line
Okay, okay.
structure, quarter points, right? Got a couple moving averages and a few different forms of fractals, and then and daily highs and daily lows, and then average daily high, daily low. All this stuff is in the group though.
So after you check your structure template, then you go to that the template that has the MACD on it.
Then we go to my golden strategy. Yeah, that
Okay.
template is called this lady. She's a beautiful lady. Her name is Kat. She kind of coined it Jenny's golden strategy. So that's what we
Uh-huh.
call it now.
Yeah,
So
yeah.
once we have an idea of what the market is doing, just like we should be doing for simplicity, get
Hmm.
an idea of what the market is doing, and then you go to your whatever strategy or template you're using to take entries.
Okay, okay. So basically simplicity and the golden strategy is totally two different um things.
Dynamically different. Yep.
Oh, okay, okay. But on this evening call, do you go over both the golden and the simplicity?
No, sir. I usually just do simplicity on this.
Oh, on this one. Okay, 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 okay. So for the golden strategy, it's only on Tuesdays and Thursday mornings?
Yes, sir. That's correct.
Okay, okay. Okay, I appreciate it. Oh, one more thing. I remember you mentioned ATR a bunch of times this morning. Can you just review that, please, one time?
Do you know what ATR is?
No.
Okay. Okay. So, guys, when we talk about the ATR and the ADR, I guess it's a great topic to go over, honestly. So I'm glad you asked. Some people don't even know what that is. So ATR stands for average trading range, meaning the average range of whatever time frame you're on. So this particular indicator is telling us that 100% of the ATR. Let me remove this other indicator so we can actually see the value. Let's delete that. There you go. So on this, you can see that the actual amount of pips this moves
Mhm.
per, on average for the last 14 candles is 358 pips or 3,586 points, for example. That's telling us the average of the last 14 candles for the 1 hour. Now watch this number shift as I go from the 4 hour. Now we're at 434 pips. And watch when I go down to the 15-minute time frame. Now we're at 83 pips, right? The
Gotcha.
ATR basically means if I were to count up the last 14 candles and I averaged out how much each of these candles moved. So you'll see that some of these candles moved a total of, this one moved 169 pips, right? This candle moved, 100 pips. This baby candle moved, 45 pips, right? It takes the average of those numbers, divides it by 14, and then ta-da, you get your number. So ATR is simply the trading range that you're currently working in. And why that's important is because sometimes we're sitting in moments like this and we're trying to go for a bunch of pips because everyone told us, hey, NAS moves a ton. It's always worth this much pips. Well, right now it's consolidating. You can still potentially win trades if you know how many pips to go for. And then, of course, on the flip side of it, price is really breaking out here. Our target shouldn't be as small as it was back here. Our target should be smaller here than here. So it gives you a more accurate, concise pip target for different trades for different pairs. And you'll notice how much this fluctuates. Let's move this out of our way. Of course, that's ugly and in the way. Check this out. So right now we're on NAS. Let's go to something crazy like odd NZD. Whoopsie. Odd NZD moves 6 pips per, on average for the last 14 candles per 15 minutes. 6 pips as compared to almost 100 pips. Yeah, see what I'm saying? So
And what's the percentage?
I don't know. So
I remember this morning it was 150, or yeah, you had 150, right?
yeah, so you can decide. So for example, I was suggesting potentially going for 125% of the ATR on the 15-minute time frame.
Okay, yeah.
So this right here is just telling us the value of 100% of the ATR. So if you know what you want your target to be, and you know that for the strategy you're using, you can go for 200%, 2 or 3 times the ATR. You can program this in to tell you what 300% of the ATR is for this particular pair you're on, per the time frame you're on. So if you took a simplicity trade, for example, you would know your target is something that's duplicatable. So a lot of people are trading Forex and then they have, oh, I'm going for 20 pips. Well, 20 pips on GU versus on AN versus on NAS, those are dynamically different. And that's not optimized, nor is it duplicatable. And then you're wondering why some pairs win, some pairs lose, can't figure it out. Your wins and losses are not even, they're not equal. You can't get to the bottom of what you're doing. It's because your math is bad.
Okay.
So ATR, average trading range. Real quick, let's talk about the ADR. The ATR, if that is the trading range per the time frame you're on, the ATR, notice how close this number is to this. The average daily range for the last week, so about 5 daily candles, is 37 pips. The average daily range, the average trading range on the daily time frame is about 35 pips on this pair. So this is telling you the average daily range for the last week, the average daily range for the last 4 weeks, and of course the average daily range for the last 12 weeks.
Okay.
It's a lot of math, but we use these little fancy tools not because we have to or not because we can't figure it out. No one wants to do the math on 14 candles. But if you're willing to do this kind of learning and actually learn the math that goes into trading, you'll be exponentially more successful.
Okay. And so on the first 3 videos, it showed the Scott had like the Swiss Army knife or something. Do you recommend that or just the template you have?
I'm a pretty big fan of Scott's. He is an incredible guy. He is my partner in more than way than one. I believe it's on this chart right here. So that Swiss Army knife, I'm ready. I'm going to entertain my ignorance for a second. Watch this. I'm going to hit H. Okay, ready? Don't laugh at me. This thing does everything. This thing does things I don't even know it does. So not only do we have our symbol changer, this allows you to program in risk. And I don't even know how to use all this stuff yet. He finally just released this after, I don't even know how old the video you watched was, but he just released this. So you can program in risk. It tells you again all that ATR, ADR ranges. It tells you the value of the pip. Notice on this pair, the value of this pip is not nearly as high as it is on, any US dollar pair is worth $10 per pip. So people are trading again in ways they don't even understand what they're doing. The value of every pair is not the same. So watch, the value of this pair is worth only $7.49 for a standard lot.
Mhm.
Value of X and P, $10 for a standard lot. Let's go to Litecoin. Let's go to a crypto, $10. Let's go to, I know which one on here, German 30. German 30 is actually worth more. Let me get my candles out of the way. Is actually worth more per one standard lot. So every
Okay.
pair you're trading is worth, watch oil though. Oil's crazy. Oh, the pips are different. Oil. I should have silver on here. Maybe, baby. Hold on. Maybe. Here we go. So look, $10. Watch what
Mhm.
happens when we go to silver.
Oh, 50.
So people are like, oh, but I only move this many pips. Why is all my leverage gone? I have no margin. If you
Yeah.
don't know what you're doing, you're going to mess up. And it's not because of the system and the strategy you're using. You're messing up because you don't even know what you're doing.
Right.
You're messing up because you don't have the information you need to make solid decisions. So this gives that to you. I'm going to hit H again. This does everything from like moves your charts. It gives you risk. It'll tell you like how much you want your stop loss to be. It'll allow me to pair, to select certain pairs and like tag them. It allows me to do all the stuff that it says over here. So he can express this way better.
Yeah. Yeah.
Way better than me. And then of course, yeah, it's awesome. I think that's worth its weight. I feel like most people buy indicators because they want to make money, but
Mhm.
buying something like this or
Mhm.
even the ATM is worth more than any indicator or even my classes. I feel like it's worth more than anything else you can do because you can't buy this kind of information. You don't have the time to learn all this kind of information for all the pairs you trade. You don't have the time to achieve all of these actions by your own hand in a
Mhm.
quick enough time, and you don't have the time to learn all of this management quickly enough to be successful. So these tools I feel like are by far an amazing value. So I do recommend them.
Okay, the Swiss Army knife and the ATM. So
Yeah.
on all of your trades, you use the ATM to manage it?
I almost never take a trade that's not managed by the ATM.
Oh,
Almost.
really?
Well, think
Oh,
about
okay.
it. So
Mhm.
even if I'm talking in class and I need to find, so let's go to US 30 for a second.
Yeah.
Okay. US 30, we took this trade earlier. If I'm talking, I can't possibly come and scale out of my trade, can I? I can't
Mm-mm.
possibly come and like click back to this other chart and like close out a portion, move my stop loss, and then come back and look and come back and look and then be worried. And then this happens.
Yeah.
All the decisions I have to make in this process are a lot of decisions.
Mhm.
So if I have to make all those decisions, I'm bound to make a mistake or many
Okay.
mistakes because I'm still a very emotional human being. And
Okay.
all of our human emotion and human psychology that goes into these things, we end up making oftentimes irresponsible, reckless, or unintelligent decisions, not because we don't know better, but because we're human and we're not a computer. So this
Okay.
allows us to take this trade, for example, if we took, and these aren't the settings I would be using, but they're the ones on the chart, so we're going to use it.
Mhm.
This allows us to say, hey, we entered here, we scaled out a couple of times, we protected, and even if I wasn't looking, I still caught, that's a bad example, I'm going to go up one. I still caught my, 1,600 pips on that trade without even having to touch it. It moved my stop loss for me. It, scaled out of my trade for me. It
Mhm.
protected my trade for me. I can't ask for anything more than that.
Oh, that's awesome.
It's a lot to learn. I'm not going to fib. There's this right here will break the way you think, but it breaks it in a good way. It breaks it in a way that says, "Holy cow! Wait a minute! I can actually do this. I can get a good trade and then
Mhm.
let it manage the way it needs to be managed." So.
Cool. Okay, I appreciate it. That was a lot of information, but I'm slowly getting it.
Sorry. Sorry to
Thank you.
verbally just explode on you, but you asked
No, no,
pretty
no. That's awesome.
good questions right up front, so I appreciate you.
Thank you. Thank you so much.
You are welcome. Okay, guys, so let me pull up the chat really quickly. I've got somebody who was raising their hands. Who had their hand raised? Let's start with you.
I do.
Hi, who's I
Good
do?
morning.
Good morning.
Good morning, I'm Has.
Good morning,
How are
Hap.
you, Jenny?
Where are you?
I'm at home. I'm from the other side of the world, actually, in Singapore.
Okay, you're in Singapore. That makes sense. I was going to say it's nighttime for me, but good morning to you.
Oh, yeah. Good night. Anyway, my question is on the fractals.
Okay.
I'm still confused where I'm supposed to enter, like which fractal break am I supposed to look at? And where, if I'm going to use simplicity, like which like what time am I supposed to look at to enter the trades?
So what time frame are you supposed to look at? And then you're asking about the fractal.
As in like what time of the day am I supposed to look at, and then which fractal break
Okay,
do I? Yeah,
I'm
I'm
gonna
a bit confused. I also don't know what I'm asking because the whole concept is kind of new to me.
That's okay. We've all been there, I promise. I've been there too. Going, I don't.
Thank you, thank you.
So let's first, I'm going to answer your second question first because I feel like it's the most relevant and that people don't talk about it a lot. Everyone always asks, oh my gosh, what's the best time of day to trade? So I'm going to come to this chart right here. You'll notice first off, I have the day separators on here. So this just shows you the different days of the week, right?
Okay,
Also
okay.
notice these funky boxes. They're kind of annoying. These are session indicators. The first one after daybreak is Asian. The middle one that has nothing but the stop hunts is London. And then the red one is typically New York. So I promise you, if we pick any pair, and I do mean any pair, you're going to find out that that pair sometimes moves in London. It sometimes moves in, here we go, in Asian. Sometimes it's perfect in New York. Sometimes it's just nice and smooth in Asian. Oh my goodness, London really killed it right here. This was perfect and beautiful, right? You're going to learn
Mm-hmm.
you're going to learn that this happens at any time of day. So to answer your second question first, I don't know what your schedule's like in Singapore. We've got a really good friend, Kat. She's over there, but I'm not 100% sure what her favorite time was. What I would tell you is whatever time that is most convenient for your schedule, with the exception of that, I'm going to say it in American time, but like between 4 p.m. Eastern time and 6 p.m. Eastern time, try to avoid that kind of 2 hour window.
Mm.
If that's the only
That,
window you have,
that's
then
a change of the day, right?
I'm sorry.
Then that's the open of the trading day, right?
Yes, that's when New York closes and then Asian opens.
Yeah. Okay.
So if that 2 hour window is too big for you, then maybe do kind of like the 30 minutes before, 30 minutes after. So that's 4:30 Eastern time to 4:30 or 5:30 Eastern time. And then UTC time, that's 0 o'clock. So on whatever broker you're using, that should be 0 o'clock. So 30 minutes before 0 o'clock, and then 30 minutes after 0 o'clock, avoid that time frame.
Yeah, it's okay. It's in the morning here, so it's fine for me.
So anything else, I feel like you can potentially make money. And instead of me talking to prove my point, I'm just going to prove it like,
Mm-mm.
so if I go pick on GBP odd, you'll notice that, let's wait for this session indicator to catch up. Sometimes people are like, oh, you can only trade that during London. Well, this is London session, and that was an awful day to trade this pair. This is London session. That was a perfect day to trade this pair. People say, oh my gosh, you can never trade it if it's not that session's time frame. Well, this is Asian, and that's an Australian pair. That's Asian time frame, right? And then GBP. So you can make money in any session. And this is the best way I know how to show you that visually, show, don't tell kind of mentality. So the best time of day to trade, if you're asking me, is whatever is best for your schedule, where you can, kind of cut out that 1 hour time to go and analyze some charts, mark them up, and pick a handful of trades. That's it. Whatever time that is per day, with the exception of this kind of crossover, that's just a horrible time. For the most part, you're going to be able to find moves. An Asian Open, you're going to find moves. London Open, you're going to find moves. New York, you're going to find moves at any one of these periods. And if you don't believe me, go look for yourself. Pick any pair, pick any indice. Don't pick a stock, because stocks, are a little bit different, but pick anything. Let's go to NZD Chef. Any pair we look at is going to tell you the same thing, that sometimes it's a perfect move in New York, like it was today. Perfect move in Asian, continuation in London, but sometimes
I see.
it's awful.
So
So
I pick the time.
you pick the time.
Okay, I got it. All right.
If people tell you, oh, you can only make money in London, don't listen. Pick the time that works best for your lifestyle and your family, or cut out like 1 to 2 time frames in a day, and then try those for a couple of months, whichever one you feel the most comfortable with, because it has enough volume. Pick that time frame. Deal?
Okay. Okay.
So that's your first question. Also, and just for knowledge purposes, remember London supposedly and New York supposedly have the most volume. Now that doesn't always equate to the biggest move though, but just so you know where the most money is being moved, it's in London and it's in New York. So just so you have that information as well. But that answers your second question. Now let's go back to your first question. You had asked about the fractals. So I've got
Yeah, the fractals.
a lot of questions about that. So I'm going to kind of zoom out a little bit, make this kind of ugly, and take a look. We're on the 1 hour time frame for Australian US dollar, 1 hour time frame, right? And we've got the simplicity template up on our charts. Please forgive these little lines. These just show the 3 o'clock hour, which is literally right now. So I can kind of use it for reference for these classes, right? Here's the deal. When you get a signal, we can't always get it in this very second. We're not always in front of our chart the second this happens. So as a rule of thumb, to help you catch continuations, whether it's this strategy you're using or others, I feel like this is a really good way to be across the board. If you get a signal, let's say you come to the chart. Actually, I'm going to remove these lines for a moment just to clear this up a bit. Edit. I'm going to put it only on the 30. There we go. Get it off there for now. Wait for that to catch up. Okay. There we go. So now it's off. Let's say you were at work during this time, or in my case, I was sleeping. So this is London session. I'm sleeping. Oopsie, let's go back to that. Come on, don't be silly. So when this comes in and I come to check my chart, let's say on Monday morning. I don't know what day of the week this was exactly, but I come in here to check my chart. I see a beautiful simplicity signal, or I see a trade setting up via whatever system or strategy I'm using. Well, people are like, oh my gosh, now I can't ever take this trade because it's done. And what am I going to do? For me to create kind of a rule of thumb, I put my fractals on here. And all those fractals mean is if I came to the chart, let's just say it, this time frame, I'm sleeping, I wake up here. Okay. I wake up somewhere around 1400. That's real time in my real world. So I'm looking at this trade. If my chart would stay still, there we go. I'm looking at this trade right at 1400, 1500. So I've got a buy signal. I can decide, A, I'm going to enter now just because I see the signal, tighter stop loss. Obviously, that's a benefit. But I like to be more confirmed. I would rather be late with my, confirmed entry than early with my wrong entry. I'm not saying that's the only way to trade. I'm just saying that's the best way that I know how to trade and the most consistent for my trading. So the rule that I implement is this. Our most recent fractal is back here. So when price breaks that fractal, I'm going to take that trade. Does that make sense so far?
There's another fractal just before the line you draw. Yeah, that one.
Well,
So I'm a bit confused. Is it the fractal at the simplicity signal?
well, that's a good question. So do you know much about fractals?
No, not really.
Okay. So just so you know, a fractal paints by having the highest point 2 candles before and 2 candles after. So this fractal did not paint until the close of this candle, and it's not stable until the close of the second candle after. So this candle, this fractal would not have even been here yet.
Yes.
This fractal wouldn't be here. So let's just pretend I was looking at it right here. This fractal doesn't exist yet. I would be using the most recent ones to the left.
I see. Okay.
So, and when you think about fractals, always think about them in batches of 5, 2 candles before and 2 candles after. That's the highest point. And then for buying ones, 2 candles before, 2 candles after, this is the lowest point of those 5 candles. That's how a fractal is formed.
And so if I look at it after it's stable, like your line, and then I look at it like 2 candles after it's stable, then can I use that fractal?
Yeah, of course. So that technically would have happened by here.
Yeah.
At the close of this candle, that fractal is stable. So then you can say, hey, I'm breaking out of structure right here. I'm going to take this entry.
Okay. And it's the close after that particular fractal.
Yeah, so I want price to break this point. I need price
and
to
close
here.
Yeah, okay.
I don't need it to close as much, particularly with fractal breaks. It's not the close. So I want to reiterate that.
So I can put a pending order.
Yes. Yes. I've really become a fan of pending orders more so than I ever thought I would have. I was very adamantly against pending orders for a very long time. for a multitude of reasons. But now I feel like we have this perfect, loving relationship, and they work perfect for me. So putting a pending order right here, I would use the base of this fractal. I'll zoom in to show you what I mean. This is a little hard to point out. So you see the widest part of the fractal right here?
Mm-mm.
I would be using that as my area. So for example, let me get a vertical line and show you. My pending order would be at the base of kind of that fractal, if you will. That's where my pending order would be. If I was to take this pending order and I said, hey, I want that earlier entry, I want it right here. I see the fractal. I came to my charts at a little bit later at 1600. That is when I actively start trading typically. So I take this, it's going to break that point right here. It's going to enter me into that trade as a pending order. Your stop loss can be as close as here or as far as back here on the 1 hour time frame. Let's see where'd that go. So you've got quite a few options. You can actually have it here or down here. I would recommend a little bit beyond the fractal. You want some room, a little bit beyond these fractals. You want some room, particularly with the reversal system. Very, very nice to have.
Oh, I see. I see. Okay. Thank you so much, Jenny. I really appreciate it.
You are welcome.
I have a better idea now. Yeah. Thank you so much.
You are welcome. I'm really glad I could help. Antonio, in the chat, you said, were fractals created by simplicity, or are they standard and can they be found in Hugo's way? So, Antonio, fractals are one of the most, I think they're only second, and this is Jenny's opinion, take it with a grain of salt, but I think they're only second to, the Ichimoku system. It's one of the most tried and true systems. Fractals were created originally by Bill Williams. You'll see his own section. So he's a total genius in his own right. First and foremost, he's got tons of other things that he has played around with as well. Most notably the alligator, most notably fractals. A lot of people like the awesome oscillator. I'm not so into that, but definitely the fractals and definitely the alligator are pretty decent tools for your toolbox just to learn a little bit about. They're not bad at all. They are definitely not created by me or anybody I've ever met in real life. They're very old and they're pretty awesome. So, and yes, they're found on, you can even get these on your phone. So every broker, MT4 has them on every single platform, Trader's Way. You're going to want the regular ones though. So the ones that are kind of built in, so go to indicators list, you'll see them under Bill Williams. You want these ones. Be careful with custom ones because they're a little bit off. Notice this is already a little bit away from price so as not to interact with the candle, but some of the custom ones, particularly on TradingView, they're substantially off. They're great look at me points, but they're so far from price you can't use them as anything but a look at me. You can't use them as like, I'm going to put my entry at that point because they're just too far away. So I hope that helps a little bit. Okay, I'm going to go through real quick this name list and see if Miss Melanie is on here just really fast. I see because she had some questions. So Melanie, are you there? Are you able to unmute yourself?
Hey, yep, I'm here. How you doing, Jenny?
I'm doing fantastic. I'm here special for you because if I did not get that message, I would have just made a recording, honestly.
I'm glad you got it. Well, I really don't know what to ask because I haven't had a chance to pull the system up yet. So I pretty much was just sitting on here listening to everybody else's questions, which they had some really good questions. However, there is one in particular that I did want to ask that I don't need the system right now for. When it comes to engulfing candles, I wanted to see if you could elaborate a little more on that because like in Uncle P class, he would, talk about engulfing candles, like that's like the best time to trade or, look out for those. So can you, I guess, break that down a little bit for me?
Okay, so yes, I'm going to start with that. Again, I'm glad you're here. So first, let me preface by saying anything I say is not to undo or be against what anybody else believes. There's a lot of very successful traders that see the market very differently, right?
Okay.
So I'm going to give you my kind of perception in terms of the engulfing candle, or as somebody on YouTube calls it, the big A candle, right? All they are is momentum. It's a big shift. So when this happens, that's a big candle. So whatever you want to call them, engulfing candles, engulfing literally means this candle is twice as, if not bigger than, twice as, if not more, bigger than the candles before. So that's the terminology engulfing candle. I'm going to
Okay.
zoom in a price a little bit for a second. That's can be very subjective, right? When somebody says the big candle, when somebody says the big A candle or the momentum candle, that's a very individual word to different people because they can call this a big candle. This is obviously a big candle. There's a
Right.
lot of big candles on this chart. So what defines and what is the difference? So,
Mm,
so
okay.
to first off, to define the terminology engulfing candle, this engulfing candle by definition, so not me, I didn't get to make this up. I don't get the credits for this copywritten, terminology here. But engulfing literally means this candle is twice as, if not more, bigger than the candle prior to. That is engulfing the previous price.
Mm,
With me so
okay.
far?
That makes sense. Yep.
So this one is technically engulfing the previous price, right?
Mm-hmm.
Engulfing literally means to swallow up. Okay.
Mm,
How to trade that though, that's where the subjective part comes in. So if anything I say is in conflict with what Uncle P says, just know there's more than one way to do this. And at the end of the day, my hope is that you find your way. Okay.
right. Thank you, girl.
No. So wait, there's more. The engulfing
Okay.
should not be taken as a signal. And I'm going to say that again. Please don't say, oh, there's a big candle. Now I have to take this. Because almost always, depending on who you ask, not enough people teach this. When you get an engulfing candle, taking it right here is a very, very foolish decision. Because over 90% of the time, and again, that number is, kind of floating around out there. I'm not going to dare say that that's what my opinion is, but they say 90% of the time, it almost retests 50%, almost 90% of the time. So to get a retest of an engulfing candle to the 50% point is you have a 90% likelihood of that happening. So when you get the engulfing candle, this should not be your entry. You should be waiting for the retest of 50% of that candle. And that's where one of those kind of pending orders, that pending limit order would come really in play. You get a
Mm-hmm.
signal, it's on an engulfing candle. That's telling you there's a lot of power in this move. There's momentum. The heavy hitters, the institutional traders are right here. That's a very look at me area. That's an important area. But it doesn't mean you
Okay.
want to enter here. Your best entry, best case scenario is a pending limit order. So you would put like a sell limit right in that 50% area, which is going to
Mm-hmm.
tighten up your stop loss a little bit. You have a 90% likelihood of that getting hit. And that's not Jenny's definition. That's just the one floating around out there. If it doesn't come all the way back up and activate, then you have no loss. If it
Okay.
does come back up and activate, you have a smaller loss if it reverses. And if it comes up a little bit and not all the way and then continues downward, well, that's okay. You've got all these hours to kind of come back and check this chart. It's like a whole day almost. And most
Mm-hmm.
traders are fiends. They're on here for hours and hours. So you're definitely going to see this happen. You can always come back to the chart on one of these candles and say, okay, now I'm going to put a stop order. If price continues in the direction I want it to go, we've already broke this fractal. We broke this fractal. I'm going to take this trade.
Okay. All right. So I'm understanding, what you're saying in regards to to the engulfing candle. So pretty much what you're saying is usually when there's an engulfing candle, don't hop right in. You want to wait for the pullback just to see what it's going to do or the retest, which is the same thing, right?
Yeah, well, yeah, in theory. But go back and look at this for yourself. So look for some big candles and look how many times price comes back up and kind of retests, not exactly, but 50% of that move.
Mm-hmm.
Notice also that I'm trying to find a good example, but Lord knows cherry picking never works out too well. You'll notice sometimes we get these big candles and all that is a spring to reject. So I don't see a great example on this particular pair. But sometimes you're going to have this moment where price kind of shoots up like this. If you had just taken it, you were wrong. So you want the continuation, you want the confirmation. You want, and I don't find a really good spring right now to show you that. Here's an example. Big candle, and then we just reverse, right? But it's not the example I'm thinking of. They do exist, they're just not right here right now.
Okay.
But does that kind of help feed to a little bit with whatever Uncle P was saying about the engulfing candles?
Yeah, it does. Honestly, I need to do a little more studying so I can, so I can really comprehend it, what you're saying. I am following you, but I don't understand it enough to really be able to, let it resonate.
Fair enough. And that's honest. That takes a lot to even say because most of us don't admit that too
Yeah.
often. It's like I hear you. I don't know exactly what you're saying. I hear the words you're saying, and I'm gonna process them. But I'm gonna work on that. So
Yeah, not all the way, not right now. But I do also want to ask you about market structure. I know that I've been watching some videos and they talk about trading, knowing what market structure is in order to figure out what the market is doing. And you were talking about that when you were speaking to the gentleman like a little while ago. I heard you touch about structure, but can you kind of like break it down and explain a little further what it is, or like um, I guess how to notice it? I heard something about like correction and continuation, and I forgot what the other word is. It starts with a C though, but
they're all words. It's okay. You're gonna learn them. So honestly, we all feel like our head is spinning, and no one, I feel like no one wants to admit how crazy this industry can make you when you don't know anything. You're like, holy cow, this is a whole new. There's words I didn't even know existed until I had to know they existed. So
exactly.
let's go over this first off the proper way. Because if I'm going to teach you, I want to teach you the proper way. And then I'll show you the template that I made that just helps with new people. It's what I use to teach new people in my morning classes. But if I'm going to teach market structure, here's what I'm going to do. Literally, I'm even going to delete my 50. We're going to have a completely naked pair, totally naked, right?
Mm-hmm.
You're going to find a billion gurus. They're going to charge you $1,000, $5,000 for an hour of their time to teach you something. I implore you not to spend that money. Okay. Instead, put $1,000 into your own account, win or lose it by yourself. You're going to get way farther, way quicker. So, disclaimer aside, there's a lot of different ways to do this. The best way I feel like is on TradingView across the board. TradingView is a platform that allows you to kind of learn to mark this up. This platform is the one we trade from, but it's not as conducive to kind of marking up charts. Just so you know, I would practice and playing on TradingView once a week for an hour. Just once a week for an hour, go mark up the pairs you want to trade and then come back to it at the end of the week. Once a week,
Okay.
an hour, do that. That's literally all I did to learn. So that piece of homework, you've got a handful of ways to do that. You can choose to zoom out. You can choose what time frame you want to go up to. You don't really need to know what's going on the weekly time frame unless you're trading the daily or the week, the 4 hour. You don't really need to know what's going on these enormous time frames unless you're long-term swing trading or at your all-time highs or all-time lows. This isn't relevant to your, typical trade in general, unless you're trading high time frames. So pick the time frame that you're closest to, preferably either the time frame you're on or the time frame above it, and start there. You can zoom in as far as you want, but make sure you can see kind of the lowest and the highest point. Obviously, this point doesn't matter as much to us when we're way up here. Now, is it good to know? Sure, but it has no basis with where we're at right now, so it's not relevant to the conversation. So I'm going to go ahead and say this is technical candles. There's a more complicated way of doing this that involves kind of candles and wicks, which if you remind me next Tuesday, I will go over that on TradingView. We'll make a nice recording of it and let you walk me through marking up the charts. Like you can remote into my computer. It's kind of fun, actually.
Oh, don't put me on a spot like that. Oh my God.
How else are you going to learn? That's what I did. I mean, I'm willing if you're willing. Totally up to you.
Yeah, I am.
What I do, let's keep it super simple because everyone overcomplicates things to sound, they sound more confident, they sound smarter, makes them feel special and important. Forget all that, make it a line chart. So we typically trade with Japanese candlesticks. Forget all that noise, go to the line chart. Very simple, plain as day. You're looking for your peaks. Preferably you want at least 2 touches, right? 1, 2, run it through. That's one of those things you can write down and it sticks with you. You're looking for an area where at least one of these peaks has touched at least 2 times. So I'm picking this area because you see here, this is, that area kind of wick down, came back up, wick down. You can see this baby peak here, came back up, broke through. So these aren't boxes. These are just vertical lines. So a box would be a little bit better. Again, this isn't the optimal charting, tool. So lines are sufficient. They're not perfect. They're sufficient. But all we're doing, line chart, 4-hour time frame, find your high, find your low. Price is currently pointing up or down.
Um, it looks like it's coming down, like it's going up, but it's coming down right now.
Okay. So price is currently pointing down. We are always looking for where price is going. So
Okay.
I don't care if we can find 20 other places going up or 20 other places going down, but the most important ones are always where price is currently going. That's how I remembered it, and that helps me. So I'm looking for another area of interest to the left going down. We've already got our first one. That one was pretty simple, right?
Yeah.
Don't see another one between here and here. Granted, this is not a fast moving pair. This is CAD Chef. So I'm going to go measure from price down to my line that's only 10 pips. I'm okay with that. So now I'm looking for my next area of interest, kind of in here. Price has stopped here, 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 right? So that would be another zone. I'm just marking up kind of zones. That's all.
Okay. And so the zones are pretty much like when the price, I guess, like switched and it broke out of a certain area. Is that what it means when you say you're marking up the zone?
Have you read the book Trading in the Zone by Mark Douglas?
I have not.
Okay, listen, it's totally on Audible. You don't even need to read the physical copy. You should listen to it 3 to 4 times once a month. Well, once a month, every month for the next 6 months.
Okay. And it's called Trading in the Zone.
Trading in the Zone. It doesn't teach you how to trade. Most of it's psychology, but I
Okay.
assure you, it will make the biggest difference, in your trading journey. So,
Gotcha.
so this right here, we're just marking up some areas where prices stopped. We're looking for a couple of points. We're looking, that's very simple, looking where prices kind of stopped before. And of course, we know we would have one here and one here. As long as I've got 1 to 2 areas below, 1 to 2 areas above, I'm happy. So I'm going to move up now. Price stopped here. We can kind of look left to kind of prove that, right? Price
Mhm.
stopped in this area. And you'll see how much simpler this is with the line chart once I go back to candles. You'll be like, holy cow, that took all the crazy away. It really did just take all the crazy away, all of it. This is not perfect, but people who try to make it perfect, I feel like, are just running a fool's errand. So we know price stopped here. Looking to the left, it's a decent area of interest. Not perfect. I said decent. We're just looking
Mhm.
for potential zones. If price continues to move up and we break through these zones, we're looking at places where price has stopped before, because that's where our targets are going to be. That's where we're looking for turnarounds, for rejections, for reversals, and we're seeing if price breaks through. I know this is a little bit further than what you're ready for, but it's also the there's a whole strategy based off of pivots. As you break through different zones, you have more likelihood of reversal. You break through all these zones, you're at a very high likelihood of a reversal up here. And you've had these perfect targets and potential take profits along the way. It's a perfect storm. Same thing with moving down. So as we come and we break through these zones, we break through here, we know that we have a very high likelihood of hitting our next targets without a doubt. We know we have not a guarantee, but a very high likelihood.
That is so impressive.
It looks like it, but no, look. Last thing, look how simple it is to draw a trend line when you're on a naked line chart. Naked
Mhm.
lines. It's very simple. You see this trend clear as day. There's not a lot of, what about this? What about this wick? It doesn't exist on the line chart. It's very simple. 1, 2, run it through. 1, 2, this one probably has a wick down here. A couple full-bodied candles. So this was the breakout point. And since we would have already had a zone drawn here, we know this has double whammy. We know to take that entry. And the odds are, if we go to simplicity, we have a sell signal somewhere in here, right?
Mhm.
Same thing over here. We have a nice kind of, this one's a little uglier, kind of messy, but we're going for the 1, 2, kind of run it through. Go figure. 1, 2, 3. This is good. We can handle this. So that's, again, a beautiful trend line. We break out of that trend line right here. That's a perfect move up. Obviously, we come down and retest where price broke out. That happens a lot of the time. We come back up, we retest where price broke out. We broke out. I'd be looking for price to come back up and retest, because we never did that on this pair, and looking for a continuation. So just to give you a view what this looks like on the CAD Chef 4-hour time frame. Really simple. You've got your zones. Now you know where your targets are or your potential areas of interest. So when you're trading this pair, you know what you're looking for. But watch when we go back to candles. Look how cleaned up we just made that.
Mhm.
Perfect. This is really, really simple. People overcomplicate this so much. It's not as difficult, but everyone's always trying to define things in a new way that's profound and unique. So If you stick to just this, what we just went over right here, you can make money with just this alone.
Yeah, that's all I need. I want the basics and everything simple. I don't need nothing like extra complicated. I do not need it.
If you keep that mindset, you'll do well in this industry. If you get lost in the sauce, we'll see you next year. So does that help you give a little bit? Oh, wait, I said I was going to go over this. This is naked. Again, remind me next Tuesday. I will let you come and remote into my computer, let you kind of do it. Just I'll have you do it with candles, and then I'll have you do it with the line chart. And I would, your homework, if you were asking me, would be to do that every week, just once a week. You'll have the lines on TradingView. They don't disappear like they do on MetaTrader 4. And then you'll see how respected those areas were. You'll see, wait a minute, this one was a bit much. You'll see this one was perfect. And of course, on TradingView, it's a lot easier to like make your boxes to say, hey, this is supply or demand, whatever. You'll be able to, silly me, let me delete that. It's much easier on TradingView to say, okay, supply, demand for your major zones on the top and bottom, and then support and resistance in the center, any relevant trend lines. And when you do that, you'll be able to come back to this every week and say, holy cow, the zones I marked up, they were perfect. If I had just stopped micromanaging my trade, I would have made 200 pips on a standard lot size. That's $2,000 on that one trade. Holy cow, I can actually do this.
Okay, so as far as I'm texting myself now what my homework is, so I need to go to TradingView, make sure I'm on a naked chart, change it to the line chart, and I'm going to be looking for like the zones, right?
Yep.
Okay.
And remember, you're going to stick with the time frame, either the time frame you're on, you're trading, or the time frame above it. And that's
Okay.
go. If it's a little bit convoluted, it's hard to see because we've got it like a big move and you just can't find any zones. Then of course you can go to the next higher time frame beyond that. Otherwise, you don't really need to know what's going on with the monthly time frame unless you're on all-time highs, all-time lows. Then this stuff kind of matters, right?
So I usually do like the 4 hour because I'll like swing trade or intraday trade. That's what I normally do, like the 4 hour.
You can usually find really good zones on the 4-hour time frame, but sometimes price is just moving aggressively up. There's nothing but one nice move up. You don't really see any areas of interest, so you have to go down a time frame to get a little more clarity. You're up a time frame to get a little more clarity, and you'll see that the more you do this.
Okay.
And the more you do this, you'll see, wait a minute, I only need two, support resistance above and two support resistance and below, one supply, one demand, and that's it. And some trend lines. You don't need. Some people get really carried away with this. They'll have like 50, 60 lines, so you can get lost a little bit. Be careful with that.
Okay, I will. Thank you so much. I appreciate it.
You are welcome. Last, I promised to show you my template. There we go.
Oh, yes.
I created this mostly just, it's easier to go to class with, right? I can't mark up that many pairs for that many people that quick and then catch opening bell at 9:30. So 9:30 a.m. comes around. I want to be able to kind of bird's eye, 10,000 view, glance at this and get an idea. These are all free indicators. Every single one of this is free.
And that's 9:30 Eastern time.
Yes, that's correct.
Okay.
I better specify that. Thank you, Derek, for pointing that out. So what I do is I come to my chart in the morning. I typically only trade a handful of pairs, guys. I'm not looking at everything unless I'm doing the simplicity thing once a week. But I come to my chart and I look at kind of what price is doing on this pair. I'll bounce around some time frames just to get a good idea. So we were just on CAD Chef, so let's go to CAD Chef for conversation purposes. We were on the 4-hour time frame, so let's go there for, again, conversation purposes. Let's go. Stop being silly. There we go. First and foremost, you'll see that this chart has a couple of indicators. One of them is a trend line indicator. Again, it's free. It is not perfect, but it's nice to be able to see for the new people where the trend lines are. And when we break a trend line, you've got to trade. We still need to have rules to enter it, but you've got to trade. You know that we've got supply and demand zones. That's what these big boxes are. It's just a different form of support and resistance. And this one particularly even tells you how many times it's been retested or how significant it is. So this one's untested, this one's weak support, right? So it gives you some valid information. And it kind of gives you everything you need to know. So on this structure chart that we look at in a glance, We've got our trend lines. We've got supply and demand, or support and resistance. We should have had the daily, interesting, the daily high and low indicator, which is not here for some weird reason. Huh. It's not on here. Just doesn't want to show up for us today. But we typically have that as well. It shows us what yesterday's daily high was and yesterday's daily low. That's significant because that's a strategy all by itself, right? We want to know if we're breaking out of yesterday's highs. We want to know if we're bouncing around yesterday's lows. So we've got that on here. Typically we have quarter points as well. We can't have them on the daily time frame because this would just be a mumbo jumbo mess. But if we pop down a time frame, you can see them here. I'm going to come down a little bit more, go to the hour chart, I suppose. Double click over here. You can see we've got our quarter points on our chart somewhere. There we go. This is a slow moving pair. It's hard to see. So quarter points, half points, hesitation points. Those are solid areas of the chart just to give us areas of interest without having to draw up our own zones. You'll notice as you expand your trading journey that those are better zones than most of the ones you mark up anyways. So it's a win-win. It saves you time and it's already done for you. Plus, unlike Fibonacci, which everybody, says is the end all be all, this does not adjust. This doesn't adjust based off of opinion, and it does not adjust based off of perception. It is consistent no matter what. It's consistent in overbought, oversold. It's consistent at any pair, any price. It does not matter if you're at all-time highs. It's the only thing that keeps going and is not so individual, if you will. So I absolutely love that for the purpose of kind of marking up my chart. I also have my average daily high, average daily low. Those are nice targets to look at. If we break out of this trend line, for example, my target would be the ADR low. And then if I right click to tell you what else is on here, a couple moving averages, GAN high support and GAN FX supply and demand. Those are those boxes. It also has a custom built fractal. You can take it or leave it. It's just programmed to be the more significant fractals, if you will. Trend line bar alert, as you know, is the ADR. We already went over that. This simply shows you the spread with two baby lines. You can see that in other ways, but I prefer this one. It works for me. ADM marker. I can never remember. I think that's this one. I'm pretty sure. We have a couple ones that do the same exact thing. So that's our ADI high and low. This tells us that our ATR daily high and low shows us yesterday's high and yesterday's low, quarter points, and then of course fractals. So you can take or leave as much or as little of this as you want. You don't need this all. But again, for new people, when I need to look at this from that 10,000 foot view and I need to do it quickly on multiple pairs, everything is drawn out for me. It is not meant to be perfect. Indicators are always a little off compared to your naked eye, but they're also very beneficial if you're doing big things quickly. So that's the template that I know Daniel was raising his hand. He had questions on. I really need to remove some of these fractals, I think, because they're driving me nuts personally. Let's remove those. That clean it up a bit. That's what we do even in our class for our scalping strategy. We go over this first, then we find a trade using the system that we use. And in theory, you can do the same thing. You can go over your structure kind of template. You can go mark up your chart and get a good idea of what price could do if it bought and what price could do if it sold. And then go to your simplicity chart and say, am I going to take this entry or am I not going to take this entry? So that was that. Does that help, Melanie? Daniel, I saw your hand raised.
It does.
All right, awesome. Thank you.
Thank you.
Yes, and it was going back to that line chart that I had the question. So in order to draw the lines, it's better if you do it through a line chart, or it's like for a newbie, right? For somebody new.
Well, I'm not as new as I was 6 years ago, but I still like the line chart better. So there's a handful of ways to do this consistently. I do think some of them have value. Some of them even may have more value. But Daniel, you hear me talk all the time about duplication, right? To duplicate, so let's say I marked up the perfect chart, and on this chart, sorry, Gail, I muted you. If you have a question or comment, just 1 second, and we'll get to you, or put it in the chat. Okay, so Daniel, there are a lot of ways to do this, and I do feel like some of them have value. I feel like some of them have and deserve a lot of credit because they're really accurate. Some of them are very genius, and I love what I see when I use them. However, you hear me talk about all the time duplication. So even if it's perfect, if you can't duplicate it and other people can't duplicate it, it doesn't have as much value, at least for me. So for example, some people use engulfing candles. Go figure, we're going to bring that up again today. But some people will use the most recent engulfing candle, bearish engulfing candle, for the area of supply and demand, the most recent largest bullish candle, right? So to find the lows. And then they measure those in a way, they measure 50% of that to kind of measure our boxes. And we'll go over that next Tuesday. I think that's a great idea to go back to TradingView because we haven't done that in a while. And then again, for the support and resistance zones, they do that a little bit differently too. They're looking at wicks. So can we do that and find some really good areas? Yeah. But then we get into so many different questions, such as the size of the wick, the location of the wick. People just jump all over the place when you give them that much information, including myself. So it is not a judgment thing to say, oh, well, only people who have 20 years experience can do this, right? Because I feel like you can achieve really, really similar and good results keeping it very easy on yourself versus like coming here saying, okay, well, this is technically the bottom of this candle, but this is the bottom of this candle, this is the bottom of this candle, this is the bottom, this candle, this is, well, which, which area are we using, right? It just becomes this really messy emotional decision-making process that we don't have to put ourselves through if we choose to find a more consistent, duplicatable way. So for me and for mine, my favorite marking up of a chart is still a line chart and probably will be forever. And the reason why also is this line chart is ignoring those wicks that the institutional traders swear are everything. This is this is the biggest, most heaviest part of price, right? The wick came up, sure, but this is where the price was. This was where the party happened. This was the aftermath, right? And if I go back to the line chart, the candle chart, sure, there's some wicks. Sure, there's a wick. We don't see that wick. This wick doesn't even exist here. So pay attention to this area right here. I hope you can see my mouse. I'm gonna draw a line, I guess, in and around here. Notice how we don't have any peaks here. It takes the noise out. And now notice we've got a peak here that we didn't even have. So those fake out moves, the line chart takes those out of our view. We don't have to think about them. We don't have to be analyzing them. We don't have to make a billion decisions, which I think we also talked about that a few weeks ago in class. The reason why people fail at this industry and all the multimillionaires and billionaires who wear the same t-shirt every day because they know they only have so much decision-making power per day, they don't want to spend it on useless activities. It kind of goes back to feed into that conversation. The more useless activities we can kind of avoid or have figured out for us, the more we can use our big brain and decision-making power for the things that actually matter, such as finding our trades, how to manage them, what we actually need to do. The line chart deletes all of that drama that we didn't even need to know about because that was a fake out. There was no actual close here. It didn't exist on the line chart. If you see that, and we still got the same zone. In all fairness, we still got the same zone, even by ignoring the extra information that we would have been more tripped up about if we kept it on the candles. We still would have been way more emotional and saying, well, what about here? The candles are stopping here. What about here? This is a big wick. This is the most important one. Or what about here? And it's down here. And
Hey, you sound just like me.
see, I bet I do. We heard you this morning on your phone.
Yeah,
I'm just picking on you.
no worries.
This is still my all-time favorite, guys. This is what I would recommend whether you're new or old. It's just the most consistent. You can't mess this up as easily. It is duplicatable. You can do the same thing week after week without it being so differing that you can't prove what you did or repeat what you did. This is still, I feel like, the most tried and true kind of all-time way to go.
Thank you for confirming, or because I've heard a lot of people say the line chart is just like you're saying, it gives a lot of more valuable information than with the wicks, but that's a whole lot of another thing, but as I'm learning to read price levels, I think with the line chart it helps me more than with the wicks.
Well, this is scary. I mean, a lot of stuff is happening right here. This is intimidating. You've got all these different colors. You've got this big wick, this body candle. Well, this is a formation. Well, this is a head and shoulders. Well, this is a you know, morning star and a doji. You got all this stuff happening that you feel like you have to know it all, that it becomes overwhelming. Whereas going here, and this right here is probably the most important area. Like to me, this to me is like the biggest reason why I love my line chart so much is we have all this convoluted, messy information. If we go to the line chart, it's this is still an area of interest, but this is where the oomph of that move was, the power and the actual price. The heavy money was here, not here. But those people on YouTube and the people of the world telling you that the wicks are everything, this wick doesn't even exist here because it sprung up and sprung down like a spring that did not exist. It was literally a stop hunt. It was literally just a fishing kind of move. It doesn't even exist on this chart because there was no big money there. So, but you had some questions about structure too, Daniel. Does that answer most of your questions?
That's one of them, which was how to draw the levels for our other advanced class, but that one you've already answered today.
Okay. So just to reiterate, guys, you're looking for your big zone on the top, big zone on the bottom, and at least 2 support and resistance levels in between. So 2, you know, above, 2 below, depending on the time frame you're at. You should not really have more than that. I mean, so right now we have 8, I guess, technically 1, 2, 3, 4. That's not 1, 5, 6, 7, 8. 8, like if you're getting more than 8, you're too many. We've had people come up here with like 50 lines, and of course they can't figure out left from right. Also pay attention to how many pips are in between the zone. If it's not at least 10 pips, that zone is too small. And 10 is being super, super gentle, and that's because this is a slow moving pair. If this was a GBP pair, I'd say a 10 pip zone is too small, personally. Your zone should be bigger than that. So you'd be looking at the next area of interest or the more important one with more touches kind of thing. And that's it. You're just looking for your high, you're looking for your low, and some areas of interest in between. Draw a trend line. We break out of that trend line, look for a confirmation, take it. You know, you're very likely to get a retest. You got it, take it again. You know this is a valid trend line. When you get to here, you already know this trend line exists because you have 1, 2, 3 touches. So you come here, you can go to a baby time frame and take a re-entry. You come here, baby time frame, take a re-entry. Same thing here. And of course, now we actually broke through. Probably would have missed this trade personally because I would have wanted some form of a retest. But even if I didn't, I don't mind because I took most of these. Now, if I took this sell, I know where my targets are. My targets are where price has stopped before. So really, really simple.
Yeah, and Jenny, like for example, if you use if you trade on the 1 hour, is it okay to draw the lines on the 4 and the 1 hour for like main lines and sublines?
You can really get this carried away like we talked about. So you can do this. There's no Jenny's way. And ultimately at the end of your trading journey, not the end, but the beginning and the kind of establishing of Daniel's trading journey, you should have your way. But just be careful because it gets really simple, really, really easy to come on something like this. And now you've got monthly lines and daily lines and 1 hour lines and 4 hour lines and 1 minute lines. And that's what we were talking about earlier with that whole like 50 lines. It's not valuable information, right? It's like white noise at that point.
It's a lot of noise. Yeah, I've noticed that too.
So,
it gets too convoluted.
Yes, that seems to be the word of my night. Look at that. I'm learning.
Hey, Jenny.
Yes, sir.
This is Harold, HBG. My question tonight and was answered already on the fractals. But if we go back to AUD, I think AUD USD, you were showing it earlier. Now you got a sell signal right there. Where would you enter at on that fractal?
So I wouldn't be taking this trade personally. So we're on the 1 hour time frame. Here's why. Let's take a look at the bigger picture. We got a sell fractal. Well, sorry, a sell signal. We're kind of at the bottom right now. We're in what Uncle P calls the hot zone.
Okay, okay. I was just looking at the arrow. I was just looking at the fractal. You're right. I wouldn't take that. I wouldn't be taking it.
Remember, yeah, I was gonna say like that's not a great. This is a
Right.
beautiful breakout. This is a nice.
I was just looking at the fractal. I was concerned, okay, where would you take a trade right with that fractal? So we need to go back to a different area. I guess to that one where the buy is, where the sell is at, up in the buy zone. Right there.
Okay, so what time do you come look at your chart?
I usually look at my chart throughout the day, but usually I get up about 6 o'clock in the morning,
What time zone?
Eastern.
Okay, that's right here. Ta-da. So that means you came to the chart and you saw this happening, right?
All right.
Just discussed that first off, engulfing candles, not a bad way to be is doing that whole 50% of an engulfing candle. Now, the benefit of that is you get a tighter stop loss. That's obviously a win, for in most people's eyes. For me, I don't do a lot of limit orders. I can see the value of them, but currently I'm not playing with those as much, doing a ton of stop orders, not a lot of limit orders. That's just my preference. So if I come to the chart on this time frame, remember this fractal is not yet formed. It's not there. Pretend it's not there yet. So I'm going to zoom in. This fractal does not exist until the close of this candle, and it's not stable till the close of this one. Just so you're on the same page, this does not exist yet.
Right.
I can already see that we've broken out of this fractal. I see this nice engulfing candle. I can decide to either A, enter here. I can put a pending order here, which means I would have got activated somewhere around this candle over here, which is, let's see. That's about 8 o'clock, which is the time we're at right now. That's 8 p.m. Eastern Standard Time, would have activated us into this trade if we had kind of that pending stop order, and that would have taken me. Odds are, if I were to have taken this trade and I saw this, I would be doing the pending stop order and taking it down. That's how I would do this, because there's no fractal before that. Like, we've already broken that fractal. That's already happened. We're kind of there. I can choose between the active order and just take it because I'm very confident of this based off of my knowledge of this pair and the structure chart that I've already looked at. Or I'm going to wait for it to break out. Odds are I'm going to wait for it to break out of the zone, which is right in and around one of these two candles. And then I'm taking this sell down.
Okay. Yeah, I'm trying to learn these fractals. I took a couple of those trades last week, and I actually had NZD CAD that you had called out. I got in that, and I think wore me out mentally. It finally broke today, but it wore me out mentally.
So, yeah, guys, we've got a few weeks. Well, first off, let me say thank you, Derek, in the chat. To the few people who are asking about the golden ticket, the golden strategy, and the settings and all that, we'll be back live for that Thursday morning. That's a great time to go over those settings. Congratulations on the pips you made this morning. And let's go back to that on our morning class. So anything structure, basic trading rules, anything that's not exactly relevant to that strategy, this is the perfect time to ask. So thank you, Derek, for always looking out. Let's talk about last Tuesday's class real quick. We only looked at a handful of pairs. Last week was NFP. We know a lot of traders do not even trade during NFP, as in not just USD pairs, but they don't trade at all. Even myself, I have been known to not trade at all during NFP week because the markets is just all over the place. It's just choppy. It's just temperamental. Now, we did, of course, take some trades last week. Let's take a look at what happened. And I'm probably going to do a different video to go over those trades, but since we're live, I'll go over NZD CAD, at least for right now. So NZD CAD we looked at on June 30th. Technically, it was June 29th, but we're going off of UTC time, so we're going to go to the proper time. And you even just said it wore you out.
Yeah, it did.
This wore me out too. It's hard. And a couple of the pairs actually hit the other direction, go figure. Now, we broke the fractal pretty immediately. So we broke that fractal in and around that time. Stop loss can be as big as here, as small as here, here, here. Totally up to you on how you want to do this, right? I can't dictate that for you, but remember we took this off of a 4-hour time frame. Of course, I just lost my line. So that was this candle right here. Oh, don't be silly. Try that again. You guys see what, that's my Apple computer being really polite.
Hey, Miss Jenny, did you went over fractals tonight?
Like my fractal strategy or fractals in general?
I'm asking both because I'm after this is over, I'm gonna watch the replay if you talked about the fractals.
I talked about the fractals and how I use them and what they are for simplicity, but I have a different video on my actual strategy, and we're going to make one too. I just sent over 3 videos to Miss Donna to do her magic with, and we're on it. I'm going to make 3 videos a week to the best of my ability and start growing. So you will have that video shortly. But okay, back to this real quick. Here's NZD CAD. We took this on the 4-hour time frame, so our stop loss should be based off of the 4-hour time frame, guys. That's here. That's a pretty big stop loss, and it has moved 105 pips from where we called it. But like you said, it played around for a long time. Swing trading is not for the faint of heart. It is not easy because you're holding it, and particularly with a system like this, you're gonna have these times where you take this entry and then it sits still for a week and a half. But of course, if you get impatient, you're going to miss out on all this. And the same thing over here. We take a beautiful entry. Let's say we took it here for whatever reason. This plays around for like a week and a half, and then of course it pops off. And of course, you're going to have times where it was a false signal and you're going to lose. And then that's going to make you emotionally want to change what you're doing next time. I just saw a losing trade. There it is. So you got this sell. If it will let me show you, here's a sell right here. And we play around for a while and then we pop up and lose. So that's not the end of the world, but learning to hold these trades is not as easy as you think. This took all week and it just finally moved today.
Right. It just mentally wore me out. I just kept looking at it, kept coming up, going down, coming up, going. I said, God dang, it's got to move sooner or later. And man, it took a week.
So how often are you looking at your charts?
Oh, no, I'm just saying when I would go to it, it would just, I would be expecting to see some kind of movement, but it'd be either sitting still or it'd be going the opposite direction and then move up a little bit. I only look at my charts because I get out every morning. I go off and go walk 5 miles and I come back and I do stuff around. I'm retired. And I come back and I look at maybe every 2 or 3 hours, I look at my charts.
I feel like that's the most destructive part. Your chart every 2 or 3 hours. I feel like that's really destructive for most people. So having stuff to do outside of trading is going to make you a better trader. I don't care if it's hobbies. I don't care if it's you're special someone. Some people, your kids, finding something to do that is not on this chart is going to make you a substantially better trader, because then you can take your scalps and go on with your day. Win, lose, or draw, you go on with your day. You can take your swing trades, win, lose, or draw, go on with your day, because it's not fun mentally or emotionally. And then you change the things you're doing. You make decisions that will affect your trading. And then more often than not, you would have won had you been able to hold out mentally and emotionally on that trade. And of course, had you had the leverage. I mean, that's relevant too. So, but I will give some credit where it's due. There was a holiday on Monday and we had a big, NFP happened on Friday. So NFP didn't shake the market as much as we thought it would. Maybe it was because of the holiday. Who really knows? NFP didn't really have the reaction we thought it was going to have on a lot of different pairs. And of course, the federal government did not release the information it was going to release on June 30th either. So we had kind of a really flat week in terms of at least the American dollar, uh, to really push the market into a whole bunch of nothingness. Hence the reason when we clipped through those pairs today, we saw so many huge moves on New York session today. We finally got some volume back in the market. There's probably a lot of people traveling. There's not a lot of money in the market last week. So.
Well, it was a good learning experience. And that's probably, I watched my chart more this last week than I have because I was trying to follow this with this training. And I kept watching it to see when it was moving because I was trying to understand the fractals more than anything, because that's what had me confused where the entry point was. And you explained it beautiful tonight. So now I understand that. So, but I usually I turn my computer off and I usually go about my day and I come back, like I say, it may be 2 to 5, 4 hours. All depends what I'm doing throughout the day when I look at it.
Fair enough. Not a bad way to be. Okay, guys. Well, any other questions, comments? I know we didn't click through a lot of pairs tonight. That's okay. I might make another video either tonight or well, probably definitely not tonight. Maybe tomorrow. We've got a hurricane coming. So the whole city, I guess I should say, is pretty much shutting down for tomorrow. But maybe I'll make another video looking for a couple of simplicity entries and going over the ones from last week. So are there any live questions that you guys need help with right now tonight?
Yes. Phoenix or Milwaukee?
Well, there's one, Jenny. How are you going to get your Starbucks tomorrow?
Well, at this point, my daughter is my delivery system. I kid you not. She's just been making sure I have a Starbucks all the time. I don't know. I probably won't have a Starbucks. I mean, if it's really bad, I'll stay home. But as you guys know, I'm not a Florida girl, so I have yet to see the, blessingly, thankfully, I have yet to see the impact, except for the gas stations and the grocery stores, at least this far north Florida. I haven't seen any major impact. So, not to say it's never happened, but from the people who've lived in and around here, they said once in the last 20 years, the islands flood, the inlands kind of flood. But for the most part, because of the curvature of the land of Florida and this northern kind of Jacksonville, Georgia area, you're reasonably safe with the way they go. Now, granted, I'm not the expert, so I should not be the voice of authority on that, but I think we're probably good. Just maybe some rain and power issues. And I've got a nice generator, so I'm pretty sure my Keurig will have to suffice. Maybe a protein smoothie with coffee in it. I'll do that.
Oh, oh, how cool. Oh.
I know. You can mail me one, okay, Daniel? You can drive me one up from Tampa.
That's gonna be the world's most expensive cup, man.
Mm-hmm. Yep, that's correct. All right, guys. Hey, I hope you have an amazing. Oh, did you have one more question? HBG.
No,
Be
I'm
safe,
good. Thank
Jenny.
you.
What did you say, Derek?
Be safe out there.
Yeah, I will. I promise. Well, we're all staying home. Everyone's got home tomorrow, so
Gotcha. Yeah. Well, that makes sense.
right, and the whole city shut down. I'm
Hey, Dee, I had
Antonio.
a question.
Okay, who is that? Go ahead.
This is Antonio.
Hey, guy. How are you?
Good. How are you?
I'm doing good.
Good. Newbie question here. C pips. I think I saw an indicator for that. Is that the only way to be able to see pips? I mean, I'm using Hugo's.
Okay, there's about 101 ways. Avoid some of them. Some of them really get stuck on your chart. So I'll tell you which one particularly, and just ignore all the massive amounts of folders I've got going. But show pips is definitely one of my favorite. I don't know. Hold on. Like, I don't even know which one I like. The pipometer. Now you're going to make me find out, aren't you? Here, I'm going to go to a different chart. Let me go to indicators. There we go. Let me find out what's on this actual chart. This is my live broker. It's off screen, so y'all can't see it. The pipometer decimal. That's my favorite one. It's the one that doesn't freeze up. So it's called the pipometer decimal. I have no idea what folder it's in, but I'll look with you guys and I'll show you what it looks like. Pipometer decimal. Give me a minute because y'all know there's, a lifetime worth of stuff here.
Thanks. Yeah, I see you're pretty decked out there.
Uh-huh. And this is just my demo broker. This is the one I use for you guys. You should see my other ones. I really should delete some of the stuff I don't use or don't like or didn't like. Pipometer decimal. I could have swore I knew what folder it was in. I guess I was wrong. But that's my favorite one. It's the only one that doesn't freeze up. A couple of the other ones really have a tendency of like locking on the chart to where like when you change time frames, they never go up or down and then it pains. You have to delete the whole template. It's a mess. It's not a fun experience. So the one that's called pipometer decimal, I'm sure it's in the groups. I know I've shared it.
Okay, I can check there too.
I would start there. That's the only one I like. It's the one that shows it in this big lettering over on the side.
Okay.
I think we literally just deleted off of some of these charts. Here we go. This one. I knew I'd find it eventually. Common. Hit OK. It looks like this. There are other ones that like will tell you, even this bar alert right here will give you how many pips you're up. I don't like the way it calculates the points, particularly with some brokers, because it looks like 50,000 points. And that's it's bad enough that it's already off by a decimal, but being off by 3 decimals is a little bit intense for my taste. So I don't like this turned on personally. And it only does it on AFX, just so you know.
Okay.
But this is my favorite. You can change the corners. It deletes and repaints just fine. It's very accurate and I like it. So,
Good. So just look for pipometer in the group.
yep, that's the one.
Thank
And I'll tell
you.
you how many pips you're up. You are welcome. And then you had one more question, HBG. You really should.
No, I'm good, Jenny. Thanks a lot. You have a good evening. Be safe.
Yes, thank you guys. I hope you guys all having a wonderful, happy Wednesday. Please stay safe out there if y'all are near or anywhere in Florida, near Florida, all the places being affected by all this. Otherwise, I will talk to you guys on Thursday. Have a great evening and God bless.
Okay.
Thank
Thank you,
Good night.
Jenny. Be safe.